Welcome. We are back. New week in the market. Flat day at the end of the day, but a little bit of choppiness in between. We are just on the other side of the fence in terms of major earnings, GDP, FOMC. This week we do have a pretty light economic macro week, but some big mid-cap earnings. I mean, even some large caps in there too. We've got Pinterest already reported today, Activision as well, and then we have Uber tomorrow morning, JetBlue tomorrow morning, PayPal and AMD tomorrow after the close, SOFI, Airbnb after the close tomorrow. Wednesday we have Under Armour, CVS, Moderna, Robinhood. I'm interested to see that. Thursday, AMC, which we're going to be talking about quite a bit tonight. Baba, Crocs, Fubo, Twilio, so some interesting names there. And then Friday, DraftKings, we'll see how that goes. Also, ARKK, we talk about that on the stream sometimes. So, yeah, another interesting week for earnings. And there is a warning for tonight's stream, and I'm going to bring that up in a little bit. But I might be starting to get a little bit bearish on the market. Not super like bearish or anything, but we've had a very nice run. There are a couple things I'm looking at on the S&P 500 and some other indices that do concern me. So I'm going to be talking about that in about 5 minutes. I'm going to start with crypto. Then I'll be talking about other markets, and then we'll talk about the stock market. After that, I'll talk about the swing trades that I've alerted. Clover hit its first target today, which is amazing. Fisker's consolidating. Uber was up a nice amount today in earnings tomorrow morning. That is one of the swings. And maybe we'll look for some new swings, a lot going on. I don't know though, with how the overall indices is looking, I might kind of take a little bit lighter on swings for some time. I mean, it's been, you look at the weekly sheets for the past couple weeks, they've all been very nice and green. Might kind of chill for a little bit now after that nice streak. But let's get started with crypto. And yeah, Bitcoin pulling back a little bit, and this is a little bit concerning to me. So the first target of the Bitcoin swing that I alerted, probably somewhere around over here, is 25.3k pretty much. It got all the way up to 24.7k, so nice move. And you pretty much rallied off that channel breakout, retested the highs, made a slightly higher high, which is a good thing. You did make a new price, or you made a new price in terms of like your short-term rally. And now you're pulling back again, and you are retesting this previous resistance area, as you can see from those highs, as support, and you've actually already bounced off of it. So 23k, kind of a little bit under that. That's the big area. We could also chart a new bull flag over here on the 4-hour chart for Bitcoin. So not bad. It's actually kind of similar to this, but a little bit smaller. Really, all I want to see is another higher low being created and then eventually break above the next high. That would be nice to see. But the different story is kind of on the daily, where you have like 3 of these large upper wick candles in a row. I'm not a huge fan of that, to be honest. So I'm just hoping that that shorter term bull flag on like the 4-hour chart allows for a rally to invalidate all of these price rejection wicks to the upside, and then we'll take it from there. Ethereum is testing resistance at the second target of the swing trade. This was alerted at 1131. The second target's right under 1700. The target was there for a reason, and you can see this previous support area that I've been talking about is now acting as resistance. That happens quite often. Always look left on your charts, look for the lows and highs, and that's what you're currently seeing on Ethereum. You also have some hidden bearish divergence on the daily. So I have a few different variables pulling it back for right now. It might just depend on Bitcoin. Then we have the Litecoin swing trade, which also made a nice move. I mean, both the Bitcoin and the Litecoin swings got pretty close to the targets. Litecoin got all the way up to 65 almost. Now it's pulling back. It's kind of retesting these highs as a support. MACD is losing positive momentum, so keep that in mind. And then another one, Link. I mean, during the weekend, this swing trade was up like almost 30%. Now it's still up about 20%, and it is also retesting its previous resistance as high. So you had a nice move towards like the end of last week for cryptos, but they've kind of pulled back over the weekend. And now the big question is, can they flip their previous resistance areas that they just broke above last week into support and then run higher? That's really the story for crypto right now, so keep an eye on that. And now we're going to move on to other markets before I talk about stocks really quickly. Let's get started with this. All right, if you are a concurrent or a repetitive stream viewer, whatever you want to call it, if you watch the streams, this has been like the main talk of all the other markets. This has been my most like highly conviction, I don't even know the right words to use here. This has been the one I've been talking about every single night, that I'm bearish on the US 10-year, that I think it's going to pull back. This looks like such a major bearish reversal pattern. it's just textbook stuff. I mean, I don't really even care how this does, to be honest, but I mean, I probably should. It's probably not a great thing to say, but in terms of charts, like, this is just a really cool formation to see. Like, this is something you could definitely learn from and apply on your other charts. It's just such a textbook head and shoulders pattern, and it's playing out absolutely beautifully. So I'm just happy that the technicals are playing out more than anything else. I'm not, I'm not trying to say anything else, but yeah, the US 10-year, the bonds going lower. 2.5 is the next support level. You're pretty close to that. We'll see what happens, and we'll leave it at that for right now. That's just really the update tonight on this. Is what we've been talking about for weeks now is finally playing out. It's selling off, it's breaking down. Nothing much else to say. Then we've got crude oil, which is still just consolidating around 93. You can maybe see gas prices kind of just going sideways now for the first time in some time, but this 93 support level is just kind of testing it nonstop. It's just really this zone over here. It's just not really moving away from it. It kind of built like a tank over here. Wow, there we go. That's our tank. But yeah, you did get a bearish engulfing candle today, and you also did slightly close under the 200-day moving average. So short term, that's not great, and that kind of does come after another. And I was kind of uncharted it, but we were kind of talking about that, like another, like it's just bear flag after bear flag after bear flag. And I was thinking that the longer term bullish pattern, the green lines, would allow it to make a larger move, but I don't know. You're just not getting it, and you're just retesting the support yet again. So we'll see what happens on this support test. All right. Then we have metals. This is another one, just like I've been talking about how bearish I am on the US 10-year. I've been talking about how gold and silver actually flipped back to bullish for me when they were down at these lows. Go back to the stream from like July 20th, July 21st. I was talking about the classic bullish divergence, the major support level. And again, this is just, if you have that one friend that says TA is fake, it's astrology for men, whatever they say, just take a screenshot of this and ask them why gold bounced at exactly the same exact level that it did all the other times. Just ask them why, see what they have to say. But there's another bounce, and he literally went right from that bounce off support right up to the next resistance that I was talking about, 1780, which is actually these lows over here. So now you're going to be approaching resistance. Even more recently, that was used as a low in May. We'll see what happens now that it tests it. And if it can't break above that, then again, I might flip back to bearish on the metals, because then you would be developing hidden bearish divergence on the MACD. If this MACD starts losing its positive momentum, you'd be rejecting a previous support, flipping into resistance, kind of the opposite of what you were doing at the lows. So we'll see what happens. Maybe you can get that started like a bearish candle the next day or two. We'll see what happens. And then we've got gold's brother, silver, which is also making a nice move off the classic bullish divergence in the wedge breakout. It's also going to be retesting some May lows right over here around 20.6. And then after that, you have resistance around 21.4. So those are your metals. And then finally, we have the dollar currency index, which is continuing lower. We talked about that classic bearish divergence at these highs. It also tapped this 109 level. Honestly, I don't really remember where that level is from. I don't know if I charted like the monthly or something. No, I don't really know why that level. I might have just charted it because that was the high it put in. So yeah, you actually broke a support, which is this 106 level. You were holding it, you broke it, you even flipped it into resistance. So you're starting to see that dollar currency index selling off. I actually want to look at the euro to the dollar right now. I haven't looked at that in some time. So it's getting back above 1. You can see it was actually under 1 for a little bit. Now it's slightly back above 1. Kind of the same thing. Maybe a descending, broadening wedge forming here. Maybe the euro starts bouncing a little bit. And we'll see what happens. But there you go. So those are your other markets really quickly. Really interesting to see the US 10-year selling off and metals bouncing back up. Now let's head over to stocks. Even before I look at the S&P 500 tonight, I actually want to start off with the VIX, the volatility index. And let's talk about this. I drew this trend line on stream last week. This green trend line you see over here. I connected all of these lows, as you can see over here. And what happened? We bounced literally right off the trend line to get our first red day for the S&P in some time. And yeah, the VIX was up 7% today. And you bounced perfectly off a trend line. It's just really interesting to see something like the volatility index respecting this trend line like so beautifully. If we go down to lower time frames, you still do have that resistance zone. So you're not really like out of the woods if you're like bearish on the market and you're looking at the VIX and you want the VIX to go up. But it is a start. And then you also do have 4-hour classic bullish divergence. So, you know, the VIX is starting to kind of flip bullish here in my opinion. You could even draw like a mega wedge. I mean, I don't know. This is something to keep an eye on. Now again, the hard work would probably be breaking above this zone. But if that happens, that could kind of, you know, really get the market back into a not so fun environment, which it has been for the last few weeks. But this is why I'm doing a warning stream tonight. The VIX is starting to kind of bounce off the lows. It's bouncing off a trend line. It's showing you bullish divergence. I didn't even realize this, not only on the 4 hour, but also on the daily. So the VIX is starting to flip in terms of variables, in my opinion. Again, it's still, I'd probably want to see it above like 24 for like more continuation to the upside. That's this low over here, the 200-day moving average. But this is a start. That is something to keep an eye on. And this is going to kind of relate to everything I'm about to talk about with the market. So I started hinting at this on my last stream, like last Thursday. And then Friday, we actually took out even more resistance, which did surprise me. I was not expecting to see another rally like we did on Friday, to be honest. But now we are entering another resistance area. So we've had a great rally in the market, but now I'm kind of seeing the signs that have led to a lot of tops so far this year. And that's really what I want to talk about tonight. So let's get started. Before we even look at the levels on the chart and whatnot, I want to get started with two things, and it's pretty much the opposite of what I used to identify the lows earlier this year as well. So if you remember, let me actually clear up this chart to make it a lot easier. One thing I've been using to look for lows in the market this year is I use my Bollinger Bands, and I look for areas in which the S&P 500 is at the lower or even under the lower Bollinger Band, which is kind of the bottom of this black cloud, right? And what I also look for in those instances is high volume, these volume spikes. And you can see these volume spikes always tend to line up, or most of the time tend to line up with those lower Bollinger Band tests. Now, what is the exact opposite of that? Well, it would be going to the upper Bollinger Band with low volume, okay? And that has led to many tops this year, right? Many tops this year. Literally, you probably could have made a very profitable year so far just trading this formation. I didn't mean to extend it because that kind of messes it up, but this is not financial advice. I'm not telling you to do this, but in hindsight, like literally going long every single time the volume spiked and you were at the lower Bollinger Band would have made you money, and then going short every single time you were at the upper Bollinger Band with low volume would have made you money. So once again, we have a new, I should literally like make my own indicator for this and sell it, honestly. But also Bollinger Bands are like not my idea, but I don't know. But like, just look at it. This could be like an indicator by itself. Like I should set some sort of, I'm sure I can do it on TradingView, like some sort of tool where every single time we're at the upper Bollinger Band and volume's dropping, I get an alert, and then vice versa. But let's just call it the champ Bollinger Band volume alert is going off, and it's actually a bear alert this time. It's not a bull alert like it was back over here at the end of June. You are now on the flip side, all right? So welcome to the dark side. Darth Vader is about to pop up on this chart out of nowhere. You're at the upper Bollinger Band, and you have been losing volume throughout this rally. Let me actually delete this for a second. You can see, if I remove all these different circles, you've been losing volume. The higher you've gone, you're kind of losing that steam. So this is a warning for today, and this is just where I'm starting. On top of those variables, we also are entering an area of resistance. So first off, we have this major low from February of this year that you're actually currently sitting right at, which is being tested. And then we have this whole entire zone. We had this little choppy period in the beginning of June where we were just in this range between like 407 and 417 for like a week. You're actually back at that same price. And what happened the last time you were at these prices? Well, you pretty much dumped. The market sold off like literally 10% in a week. So yeah, and that was a week like overall. That was only like 3 actual trading days. So the last time you were here, the market literally dumped. It took a while to get back up here. It took pretty much all of June and July. So it really took 2 months to get all the way back up here almost. And now you're at the same level. You've lost volume. You're at your upper Bollinger Band. If we go down to even lower time frames, there's not much to talk about on the 4 hour, but you do have 2 different things here. You have 4 hour triple classic bearish divergence, and you're also overbought on the 4 hour for the first time since the end of March. Let's kind of draw a line over there and see what happened after that. So the last time you were overbought was literally right over here on the 4 hour. So since then, we have not been overbought. All right, so you kind of get the story: the upper Bollinger Bands, the low volume, the resistance, the bearish divergence, the overbought on the RSI. This is just probably the worst technical readings I've been seeing for the market in a long time. So it makes me bearish again, at least short term, until these variables are somehow like canceled out, which eventually they will be. This is a lot lining up. All right, and if we go down to the 1 hour chart, you also got the MACD crossover to red. I kind of have this 1 hour channel drawn. I have readjusted it multiple times, to be honest, because it's just an autopilot mode going straight up. So literally the only reason like I'm still just a little bit cautious about just going right back into bear mode is because like we're literally just in a melt up autopilot mode insane market. Like off the lows in the middle of July, we've just rallied 12% in 3 weeks, right? In under 3 weeks. So you know, it's still a little bit like, who knows, maybe we only dip a little bit with all these variables and then we just run again. But this is something that I wanted to really bring up on the stream tonight and talk about because it's a lot of variables. It really is. So we'll see how this kind of affects the market over the next few days. We're also past a lot of major catalysts, so it's kind of like we moved up with the catalysts for the first time in a while. Most of the catalysts this year have actually sold off the market, but last week all the catalysts actually helped out the market, and some of them could have also been argued as bad catalysts, but we just reacted to them by going straight up again. So yeah, I mean, I always prefer being bullish, but I just have to listen to the charts, and right now they're kind of starting to flip a little bit bearish to me, at least for the overall market in the short term. So you know, I hope this gets invalidated and we can just keep going up forever, but that's probably just not going to be the case. We're going to pull back at some point. I'd at least want to see us pull back when the bearish variables are on the chart, so it's a little bit easier to tell, right? So that's the S&P 500. The other indices are kind of the same. The QQQ is entering this resistance we talked about last week. Used to be support over here, and it was resistance right over here in the beginning of June. So you're entering that on the QQQ. You also can get classic bearish divergence if this MACD starts losing momentum on the daily. So if that MACD starts heading back towards red, you're going to be getting some classic bearish divergence there. It's not really developing yet, so I'm not going to keep it charted. Lower time frames are very similar. This is classic bearish divergence on the 4 hour developing. It's not quadruple classic bearish divergence because they make another lower high from there, but there is that. All right. The 1 hour chart, the Qs, I also have a rising wedge breakdown that I drew today. So bearish variables are starting to appear. It is what it is. You know, the NASDAQ, let's go over to the daily. It's retesting this low from March 5th of 2021. That was like the first like big, like I think that was an official correction for the NASDAQ. Let me check. Yeah, this was actually like the first, this was the first correction in the market, like since I started streaming, because I started streaming somewhere around like over here, like literally like around these lows is when I started streaming. So like that move, I remember that very well. March of last year, it was like the first, this was after like the GameStop and AMC stuff, like just after all that stuff. This was after like Fisker went to its all-time highs, QS went crazy. There was that trade I made, and this was like literally the first like major correction that I had to kind of go through all of you with on the stream. And now we're actually using that as resistance. So it's been a very interesting journey since then, all the way up and all the way down, and now we're just back to where we were right then and there. So we'll see how we react to that level. That's the NASDAQ. Then we have the ARKK ETF, and this is interesting. It was up 1% today. You did see some names. I don't know if AMC is I don't think AMC is, but you saw some names up. Tesla was actually up close flat, but it was up a decent amount at one point. Lucid was up. Chips had a nice day today if you're in premium. That was one of the sectors I talked about over the weekend, saying that I was looking into chip stocks going into this week. Chips and NMU, NVIDIA, and AMD were all up today. They did pull back a little bit later on, but you did have that going on. The ARKK ETF is still just kind of in this range it's been in. And then finally, the Russell 2000 did close flat. It did break out of this channel very recently, but it is testing this 188 level. This has been a level I've been talking about quite a bit. If we go over to the 4 hour, you can see this is the pattern completion zone of a bearish bat. I charted this when we were like somewhere over here, if you remember. But we're now testing that, and that's also that 188 level. It's a gap fill from right over here, like at the beginning of June, and it's also on top of all that, both of these major lows. So 188, this is a resistance I've been talking about for a while now. You're actually testing it right now. So this is a big test for small caps in the next couple of days, how we react to this level. And we're also kind of have a lot of mid cap earnings this week, but we do have some small cap earnings kind of within the next couple of weeks. So it'll be interesting to see that. And yeah, those are my updates on the market. Overall summary is that I'm starting to see more bearish variables than I've seen in quite a bit. So it is what it is. I'm just showing you what I'm seeing on the charts. If it doesn't play out, it doesn't play out. If we keep going up, cool. But they are the bearish variables are definitely starting to appear. That's something I wanted to give a warning about tonight on the stream. So let me take a look at the chat before we go over the swings, and we're going to start off with CLOV today, which is kind of the main topic of the stream, I guess, tonight. I don't know. But yeah, make sure to hit the like button and hit the subscribe button if you don't already. What's up, Danny, Homeless Zillionaire, Risky, KTF, Tenderfoot, Dave, AK, Poop Around It, Zeke, Tina Fey, John, Levi, Mr. Robinson. Levi saying, sounds like the bear thesis is back in play. We shall see. Risky Seed saying, people are walking away from mortgage agreements, and JOS, jobs, I don't know if you're trying to say jobs, are going to start taking hits. So yeah, bear thesis is alive. That would be a bull rally in a bear market, and a recession or severe bear market. In the past, there have been an average of 7 to 10 bull rallies of 10% or more. And then Levi is saying, agreed to that, plus economic data should have drugged the market down, but it didn't. Not sure if it was priced in or if the market expected it to be worse. Either way, Fed rates plus unemployment data was not good. And then also laid back in the chat, job vibe. So thank you all for being in the chat. I really appreciate it. And yeah, again, you all know me. I'm definitely the person that just sticks to the charts. I'm not like looking at all over the place, all these different things. But if you all are saying that, I mean, it is interesting to see. And if it's lining up the technicals at the same time, like, it's a little bit concerning. And I'm just happy that we had a really good round of swings play out in the past couple of weeks, and that these variables are appearing before we really, because a lot of the times, like, the bearish variables only start appearing like after you have like a blow off the top type of day. Like, you know what I'm saying? Like, the bearish variables will appear, but only after you get like a day like this or a day like this, right? But now we're actually seeing these bearish variables starting to appear like well before we're even really pulling back. So it's at least like a little bit easier to kind of at least manage risk a little bit better and be a little bit more prepared for when that pullback does eventually happen. But yeah. So let's move on to the swings. We're going to talk about CLOV first, which is up 4% today. And this is the first time that a CLOV swing trade that I've alerted has hit a target in quite some time. As you can see, it's had not the best series of events since it squeezed a little bit over a year ago. And finally, we have a winning swing trade on CLOV. It feels very good, definitely. And yeah, I alerted this swing trade at $2.37. You broke out of this triangle, and that's been playing out beautifully. We talked about the breakout nonstop on the stream as it was happening, and now you are much higher. And even since then, I've talked about multiple moves. We talked about the hammer candle over here last week. We talked about the hidden bullish divergence last week on the stream. All the variables have really just been playing out. We even talked about that. I know Zeke's in the chat saying, CLOV gang, yeah, buddy. You were talking about that cup and handle, the inverse head and shoulders looking formation. And I was also talking about this big test of resistance and breaking it last week. So not only has the CLOV swing trade hit the first target of the swing, but you are actually now also above, for at least for right now. And it's going to really suck if the market does pull back and it drags us with it. It's going to really suck. So hopefully that doesn't happen. But it is above resistance for now, and even intraday back tested resistance and then bounced off of it. So wow. And again, if we go over to like the 4-hour chart and we just zoom out here, I mean, you can see this is really like maybe a little bit of resistance around like 305 from like these highs and this low. But if we're talking about like major resistance, this is really like your final major resistance for a while. And so I was talking about last week. So I wouldn't say you're out of the woods yet, but it is testing a breakout of this next resistance level. And yeah, it is a nice move for sure. So good job. I mean, most of the indices were down today. CLOV was up 4%. They do have earnings according to TradingView on the 8th of August, so in about a week. And yeah, hopefully it holds above this resistance and moves up to the next target. That's the goal, to be honest. That's what we're going to be looking for. All right, so that's CLOV. Let's move on to the other swing trades now. Again, if you ever need help understanding the things I talk about on the stream, my free course is in the description. And if you're wondering where all these swings are coming from, I alert them. I'm talking about all the free swings that I alert in the Discord. The link for that is also in the description. So I'm just running through some of those right now, giving updates on how they're doing. So FCEL was the most recent swing alerted. Not really doing much. It's down a little bit. It kind of is filling this gap over here. I don't even know if it did really. 340. It did. So it actually perfectly filled this gap over here from July 28th. You are still in this super long-term wedge. You're still above the inflection zone, and you also have hidden bullish divergence still developing. So not much of a technical change, just pulling back off of a previous breakout test. So that's really the only update for that swing. Uber actually was up very nicely today. This swing is very close to the first target at 25.28, as you can see over here. It's currently at 24.60, up about 14% since the alert. All it's got to do is take out this final resistance level. And if it does that, then it's got this gap fill sitting right at that first target. So hopefully, again, we can get this move out before the market pulls back. We'll see what happens. And again, it's not a certainty that the market's going to pull back. I'm just saying, based on the variables, there's a certain edge that it might pull back in the next couple of days, right? That's what we're talking about tonight. So nice day for Uber as well. Best Buy was flat today. Really no update here. Still just consolidating. Swing still in profit. Nothing really to talk about. It's up 10%. Worst case scenario, it falls back down to the entry. I'll mark it a break even because it's already up 10%. And those are the ongoing swings. Now let's talk about some previous swings. Fisker. It's not really technically an active swing because it was marked a break even. You know, I was just talking about that on Best Buy. Fisker did go up 10%, and then it fell back to the entry. But what is it doing? Showing mixed variables. All right. So just to get started with Fisker, you're back in the zone between $8 and like $10. You can see there's multiple lows here from the past that is now flipped into resistance, right? So these lows over here developed into a resistance just recently over here. The bottom of this range is around $8. You're kind of right in the middle of this $8 to $10 range on Fisker. And here's what you also did. You had this demand line, this red demand line over here, and you flipped that into resistance. So it's not good to see a lot of these previous support areas, you know, either horizontally or on the trend line flipping into resistance areas now, but it is what's happening. The one contradicting variable you do have though is some 4-hour hidden bullish divergence. So yeah, I mean, mixed variables is really the easiest way to put it. Breaking above 1030-ish, this high over here would be great. If you can't, then you've got this gap fill around 915 and then the major support around 8. That's really it. I think it's just a kind of a time for waiting right now. The larger picture is still beautiful to me. It's just a question of, can you hold above these very important levels? And maybe we get some catalyst soon. I don't know. It's been a while since like a major catalyst. Of course, they're kind of hard at work getting ready for the ocean launch, but just waiting to see what happens. Earnings are also around the corner. Apparently they're on the 3rd, which I didn't even know that. Let me just verify that. Google says the 3rd as well, so that's what it's looking like. So that's Fisker. And then we have the other swings that already hit their targets. SHAK already hit the first target for a 14% gain. Then it actually broke above this resistance over here. Now it's retesting it as a support. Hopefully it holds. And then finally SOFI, which also has earnings this week. I think we were looking at that earlier. It's already hit the first target, almost actually hit the second target too. And it's just really consolidating between $6 and $7 really. It's probably going to come down to earnings on this one. So those are the swing updates. Let me talk about some other stuff for a little bit. We had HKD AMTD digital today go crazy. This was all over the news. I'm sure a lot of you saw it. I really don't know much about this company. I think they are out of China, and they had a recent IPO and it went absolutely insane. I mean, we can just look at the chart over here. It looks like, at least on TradingView, it opened at $13. I don't know if it was a little bit lower than that at first, but it opened at 13 and it put in a high of day 767 today. I don't know what happened after hours, but let's take a look really quickly. After hours, it actually went all the way up to pretty much 1,866. So this one's been going crazy. Of course, there's really nothing I can do on this chart. You know, it's not really something I can do technical analysis on. But looking at their website, again, I'm not really good at understanding a lot of stuff. That's not really where I spend my time. But looks like some sort of, you know, digital services. So I think the big thing here is this is like what I've been kind of reading up on, is the SpiderNet thing. I pulled up an article, and again, it's from Investor Place out of all places, but the excitement is over AMTD's digital platform and metaverse. It calls AMTD SpiderNet. The idea is to connect all of AMTD's financial operations and intellectual property into a controlled digital ecosystem. So this idea has sparked interest in a lot of people. SpiderNet was launched back in February and is mainly used by fintech entrepreneurs and internet celebrities. It collects fees and commissions from both the sides and the ecosystem. And just the final paragraph, AMTD Digital only raised $125 million for its IPO, or in its IPO. They have slowing revenue growth but high margins, and investors appear to like its business focus on Southeast Asia. So this was like the crazy one in the market today. You know, I'm gonna be honest, this in my opinion is a little bit like gambling, at least short term. So I'm not going to try and spend a lot of time on this. I don't want to bring it up tonight because everybody's kind of talking about it. But you can look into it yourself. And I guess it's all fun and games until it's not. I'll just leave it at that. But yeah, it's been making a crazy move. This has been shaking up the market a little bit. John in the chat saying VRAX started going crazy today, 117% up today. Take a look at that for a second. Biolabs company. Yeah, you know, it was up 100% today, but it did fall from $29 to $6. You know, I don't really know what's going on here, but there's always going to be crazy parts of the market. So sometimes it's just fun to watch them from the sidelines, at least personally. If some of you are enjoying them because you're making profits, great. Hopefully it stays as only profits. But just wanted to bring that up really quickly. And you did see some other interesting moves. Let's talk about meme stocks for a second today. AMC was up 5%, actually almost up 6% at the close. This is something I was talking about on the stream last week. We were talking about this 1475 resistance level. And I was saying to watch out for a potential breakout off that level. And it did get the breakout and had a great move off of it. I did alert this breakout in premium today. This was the only option alert today. Even before it broke out, I alerted it somewhere over here pretty much. And then it developed this inverse head and shoulders pattern on the 15-minute. I really liked how it was making higher lows leading up to this resistance level. And then I alerted those calls and they did go up 60%. I think they were up like 44% here. And they pulled back again. They retested the previous resistance area as a support. And they ran back up and they were up like 60% or something over here. They respected the levels really well today as well, which is what I like to see. You can see, like, I charted all these levels in advance, but yeah, it ran up to this 1504 level, then it pulled back a little bit there, then it ran up to almost the next level. These are dating back to other highs on the left, as you can see over here. Then it eventually broke that, and then it tapped 1550 perfectly. As you can see, I was sharing these levels as well. It's not just a random alert. I'm sharing all these levels. I even shared some more levels to the upside. You can't see that because my screen's blocking it out, but if you're in premium, you can see them. Actually, you probably can see them right over here. There you go. So just looking at the levels, you know, it just went level to level, pulled back at most of them, went to the next one, and that was really it. So nice move on AMC today. Just want to give an update on that. Even GameStop today made an interesting move around the open. Let's see, yeah, you could see GameStop. I mean, this is kind of crazy, but not kind of crazy. It's GameStop. Went up 5%, and then look at the price action in between. It pulled back, flipped this high into a support, went back up, retested as support, made a partial decline, and then it broke down. Then it went back up to the resistance, and then it just kind of chopped around there all day. Like, very technical stuff going on. I did play a little bit of calls. I got some calls over here, made profits on them. Then I got some here, took a small loss on them, I think. Like on this little flush candle. It was interesting. So yeah, those are the meme stocks from today. GameStop actually is holding this demand line we charted last week on stream. It's kind of in this inflection zone where it's trying to hold the demand line, but it's also testing this 200-day moving average as resistance. So there is that as well. All right. And yeah, it's pretty much the majority of the stream tonight. I feel like I just talked a lot for what was really, at the end of it all, a flat day in the market. But a lot of formations are really starting to show up. So I just want to make sure you're all kind of keeping an eye on the same things as I am. And we'll see how the probabilities unfold throughout the rest of the week. So it's going to be an interesting week. I am starting to flip a little bit more back to the bearish side of things. So we'll see what happens in the next few days. But, you know, We keep going up, we keep going up. What's the matter with that at the end of the day? It's fine with me, I guess. I just don't know if it's possible, but we'll see. Alright, so yeah, any take requests, drop them in the chat and I'll take a look at a few charts before I get out of here. Hit the like button if you don't already. Join the Discord, links in the description. Check out the Twitter. Chatter Freeze is now running the Twitter. It's really only been like my stream alerts on that Twitter for a long time. But now we have Chatter Freeze running the FTM Twitter. So check that out. All the links are in the description. And yeah.
Well, in the year 2000, I think I'll probably be the spaceships and the moon dictating robots to robots, or else I may be, I don't know, having
So Zeke's asking for Apple. Wow, I did not think it would do this, but Apple is gapping above the 200-day moving average. Looks like that's some earnings, and it's now testing another level around 162. Let me just refresh this chart a little bit. Let me just kind of reset everything. Let's get a fresh look at this. So let's chart out all the big levels on it first.
Quickly, just love is a fog that burns with the first daylight of reality.
So yeah, it's kind of really, I don't know. This 162 is an okay level, but it's not great. It's kind of in the middle of nowhere, to be honest. I would just look at how it reacts to the next levels. It's around a golden retrace from this high to low, and of the 200 moving average. If that breaks, you've also got a gap for like 157-ish. Next resistance I see to the upside is around 166. You see a couple highs over here, a low over here. So yeah, I don't really see much of a pattern. I think it was a pattern, but it just kind of broke up, and that's really where it's at. BTG. This one looks like it's bouncing off of this 327 support level, which, wow. I mean, look at this. When was this? Wow. This is a bullish Gartley with a falling wedge and classic bullish divergence. Sheesh. So that played out very nicely, but that's not what's currently where it's at. Right now it's at the same level, but the variables aren't completely the same. You actually do have some classic bullish divergence. It's already been playing out a bit, it's already been curling up. So yeah, I'd say next resistance is around like 370-ish. Then you got the 200 moving average around 4, then 429. And then support again, it's just this major low over here. It does look like earnings are coming up though. So yeah. Alright, so those are a couple of take requests. Timestamp should be up soon. I thank you all for supporting me and watching this stream. Make sure you check out the links in the description. Have a good night. Good luck trading this week if you choose to. And peace out.
Julian,
What?
can we talk?
What about?
Us. This. Julian,
What?
do you love me?
Yes.
All the days before that? All the years? And for those days, understand me, please. I've hurt you very much, haven't I?